Hey all, Tom Weller here from forexreviews.info. In this video I'm just going to go over my strategy I use on the daily chart. I call the Forex Daily Alert Candle System. I've been using this system for quite a while. It probably has a success ratio of about 75 to 80%. Very effective. And so these are the basic rules, and I'm going to actually do some demonstration trades, a little bit of back testing for me, and actually so you guys can see how profitable it is in a nutshell and how simple it is in a nutshell as well. So I'm on the Euro US daily chart, as a lot of people trade the Euro, so I just thought this would be a good one to show the example on to begin with. The basic rules are enter after a new green candle in down move, or enter after a red candle in up move, stop loss below or above the candle alert candle, as you can imagine, we'll go over that in a second, and exit on opposing alert candlestick close. Break even I generally put at as soon as it gets past 40 pips, and that seems to work really well for me, whether the market keeps going my way or not. So you do get break even trades. And like I said, how I exit the market is when I see an opposing candle close. So this is just a daily candlestick trading system, and this is one of my core fundamental ways I use for trading. Now, if you're wondering, if you're waiting between trades on the daily chart with this system, it's okay. There's many different charts. You can use this trading system on a number of different charts, and it also is, I like to use basic price action with this trading system as well. I don't just blindly enter trades, and you'll see that as I go through the trades. You'll see my reasoning for opening trades as well, and you'll see that I actually use price action in pretty much my core fundamental aspect of actually opening up every single trade. So we'll go over it, and I'll show you what I mean by conviction, what I mean by understanding of the Forex market, and yeah, so let's begin. What I'll do is I'll just pull back, which is just a few months worth of data. This is back in July 2012, so I thought that'd be a good beginning. We could go through these last 6 or 7 months, no, it's about 8 months actually, and we'll do this data. I just started with this bottom, Okay, so the core fundamental of the rules is, right, what we're doing is we're looking for an alert candle. Now, an alert candle is when you say you've got candles coming down, you've got all these red candles coming down here, bearish candles, right? You get this big green candle, okay, and it's either the same size or bigger than the previous candle. That is an alert candle. That's an engulfing candle. So that is a great trigger. You enter about 9 pips after the candle, which is about here to about here, which would give you about 102 pips. Or let's just square it down. Let's square everything down, okay? We'll square everything down or up to the closest pip. So I'm just going to say 100 pips on this move. Now I'll pull out my calculator so we can go through, right? Okay, so I've done that one. Now, is this candle bigger than the previous candle? It's about the same size, so it's not a good entry, right? Is this candle bigger than this previous candle? It's about the same size as well, so we leave that one alone as well. And also see how this has been an up move as well, so we don't really want to enter long unless we get a break above this candle area, we wouldn't want to enter long. Now, however, this red candle here, see this red candle? We got a nice bearish action, broke below the lows here, by the lower the bodies, and so it was a good entry candle. Okay, let me mark these in. Oop. Okay, so that's a good entry candle right there, right? We put the stop loss above the candle, just a few pips above the candle, and like I said, we have a break even, so we enter about here short. You never know how far the market's going to go. That went 72 pips in our favor, but it came back and hit our break even because we never had. This is the thing, is we're trading the daily charts here, so we don't know what's going to happen in the next chart, and if we stick to our rules, that's what this system's designed. So what I mean by, I just want to quickly explain to you what I mean by break even. Now this set went 72 pips in our favor. Yeah, so try and let the psychology of it aspect go, because what we're after was big moves, right? Okay, this went 72 pips in our favor and then came back and hit our break even on the next candle, as you can see here. Right? Now, this candle here, basically the way you want to see it is this candle here, it took out our break even, which to me, when I look at break even, I always see it as like, I like to put it about 4 or 5 pips in my favor, or sometimes up to you. Put 4 or 5 pips in your favor. That way, if it comes back, it's just like a short scalp. You haven't lost any of the market. If you had negative swap or anything like that, you're always fine. So, okay, now interestingly enough, okay, so that one was a bit of a break-even trade. Now, interestingly enough, this one was a good buy candle. Now, if you want to keep your risk low, then that's up to you. You don't have to enter a trade like this. You can minimize the risk by not entering. However, I'm going to stick to the rules. Right, so this is a good entry candle. Price moved down, and we got a good buy candle. It's really hard to put these stop losses under here at the moment. Alright, so that's where you'd put the stop, right? Okay, below the candle. Yeah, because if it keeps coming down and goes below that candle, then you know you're wrong on that trade. So the price actually went along for quite a while. See? And then, the market actually went back up to about here. We actually went into profit here, and this is our first bearish alert candle, which, as you can see, is bigger than the previous candle. So that's an actual enter short. So what we'll do is we'll take profit on this, right? First, would have entered about here, gotten out here, which is exactly 116 pips, but I'll just say 110 plus 110. Okay, so we're up 200 pips. Okay, so this is a very conservative form of trading, but like I said, you got daily pairs everywhere. So you can be doing multiple trades, and you stick to the rules. You're going to get losses every now and then. As I said, this is an entry candle here. So you put your stop loss. Now, up to you with the stop loss. I'll just point out a couple of things. With the stop loss, you can just put above your candle, or you can actually put it above there. That's up to you. You decide. That's your call. So with the entry here, did we get to break even at least? Okay, so we didn't get to break even. Right, and we came across here, let's see this. We didn't get to break even there, so that was a stop out. That's a stop out of 75 pips on that one. Minus 75 equals. Okay, so we're back at 135. Now, with this area, what we'd need, if it's going to be a buy, we would need it to break above this area, or like a close above, or we would need it to break below these bottoms here. So what we do is we come along, we haven't gotten anything like that. We had one bullish candle here that almost looked like it was going to go above, but as you can see, it's sunk back down. Then we got one candlestick close. We got a little bearish candle, but because it didn't break lower, like decently lower down to here, it wasn't really a good trade. And then we got a good bullish pin, which actually did close a little bit higher than everything else. It actually closed below these close and this close, so that's a good entry, and that's what I call that's also called a bullish pin bar. And if you don't know, that's a rejection candle, and that's a good quality rejection candle, which you can trade as well. So that was a good entry. So we enter after that candle, which is 148 pips. plus 100. I'll make it 150 because it's 2 pips off. Okay, so as I said, I'll round up or round down. So we're at 285 pips. Okay, so basically, do you see why I didn't enter a short here? I didn't enter a short here because we were still in this, just above this range here. If this candle here came all the way down to say around here and closed, like just below these these candles here, would have been a totally different story. I was seeing movement up, and we've got a good bullish candle, which, you know, see, this is basic price action, guys. So this is a bit of a price action lesson as well by watching this video. Okay, so we ran this up to this alert candle. As you can see, like I said, I like to enter 9 pips below, and so see how it didn't go below here. We don't enter a what's the word? We don't enter short because it didn't go below, so that protected us. We enter 9 pips below. Okay, so that was a fake candle. However, on the next bullish candle, we could have entered after it closed higher, which it did. So you're trying to listen to what... Wow, this is really difficult to do, the stop loss lines. Sorry, guys. You put your stop loss here below here. See how it closed above these two? So that was another bullish action, and so we enter here, put the stop here. You don't want to be too concerned about where the price is, because otherwise you do your head in. The stop loss will take care of the trade if it goes the wrong way. And it's the reason... I'm going to explain to you guys in a second. That's 252 pips. Okay? So I'll say 250, okay? Sorry. Now I'm going to explain to you guys, why does this strategy work so well? As long as you follow the rules and you follow basic price action. Well, the reason being is the daily chart is very... what's the word? Well, you got to look at it this way. If you get a really bearish close, that means for a whole day the sellers had control of the market. So the chances of it keep going in that direction is very, very high. Okay, the candle closed bearish. If you've got a bullish candle, such as this one here, that closed higher than the previous lows, then what's the chance that as soon as this candle ends, it's not going to keep going bullish? You've got a high probability. So what we're doing is we're using the daily high probability gap of the candles to keep going in your direction. And yeah, you're gonna get losses. You're gonna get, you know, small losses. I mean, even if you took this trade here, see how I know basic price action? I said to myself it would have to break below this low here before I would be considering going bearish on this pair. But if you didn't know basic price action and you're just willing to take a loss here, that loss would be far smaller than your wins still. Okay? So as you can see, I'm letting the rule of the market make my decisions. However, like I said, I like to see a bearish move and then before a bullish move. I like to see a bullish move before a bearish move. I like to see exhaustion. So what you're doing is you're seeing the you're seeing the currency rally on bullishness, like here as an example, and then you're seeing bearishness starting to form. And this is what I call these candles here. I tend to I take notice of them, but I tend to ignore them because they actually mean, well, to me, they are a rejection candle, but they mean like the market is undecided. However, the next candle, however it presents itself, is the way the market is going. That is for sure. So that's the way I see these. People call them dojis and all sorts of different things. To me, they're just a basic rejection. It's an undecided rejection candle to me. So with this situation, I would place my stop here and I would enter after this bearish candle close, or if you wanted to be more aggressive, you enter after the bearish candle drops below the pin here, which is right here. Okay? And you can also put your stop loss here. If you want to have really tight stop losses, that's completely fine. You make the decision. You do the testing as well, guys. To me, I like to leave a little bit of room in certain circumstances, and in other circumstances, I like it to be as tight as it can be. The reason being is because I can see in certain circumstances, I'm not risking too much even if I give it a little bit more room. So, tighter, depending on how little room I want to give it. It depends on your risk level. So, this is quite a valid stop right here. Could mean it could flick up and hit you and then come back down. But this is another valid stop as well, but it means you're risking more. So if it turns around and comes back around, but the thing is, guys, because this is the daily chart candles, the chances of it coming around is very, very low, like I said, because you've had a whole conviction of a whole day of bearishness. Now you enter here, right, and you're waiting for a bullish candle close, which is what you got right here. Now, let's read this again. We went down to 74 pips. It went back up, and you can see that would have been a break even. That would have been a break even tap out right there, which is unfortunate. Okay, and it went straight up to your break even and came back down. So sometimes, you know, if you guys want to do the testing and test to see if break even works for you guys, I like to do it. You know, you don't have to do it. You can just follow the rules to the next alert candle. You know, if it's a really high probability area of a turnaround in the Forex market, what you consider a really high probability area, then don't use a break even. Just lock in once the market has gone a really good amount of area in your favor first, then lock in. You know, once it gets past 120 pips or whatever, you can lock in then. You don't have to lock in straight away. And oftentimes I'll do that. I'll wait it out, you know, and then other times I'll lock in, and then sometimes I get stumped out, and then the market keeps going in my direction. That does happen in Forex. And, you know, as you can see, that happened right here. So it does happen, right? The thing is, you want to minimize it when it happens, because you want to make profit, okay? So, as an example, if you didn't use the break-even system here, you could have gotten 138 pips, okay? Or you could have gotten 65 pips. And, you know, sometimes you can just target a certain amount of pips too, if that's what you like to do. To me, myself personally, I love to let it ride. The reason being is when you get these big movements like 500-600 pips, you're going to get the whole lot, and it's going to really make your day on the account with little risk. Okay, so we came all the way down here, started getting some rejection candles, and we got this one rejection candle right here. And let me just see if this was a stop. Oh no, so that was perfect. See, it went to 45, just under 44 pips it went to, and you know, my spread on my account is less than 1 pip. So that would have definitely gotten to my break even, and then it would have come back on my break even, and you know, I would have gotten out there. And because this is a down move here, guys, I wouldn't be looking to sell unless I get one big candle up and then a bearish candle. I wouldn't be looking to sell. So I ignore the next candle. Okay, so this candle would make me take notice, but to me it is still a little bit of a doji candle. So I would need a close above these closes here, right? Or above these body opens here, right? Which is what we got right here to enter. Okay, not really good, but if you did enter, this is how you do it. You'd want to see this as one candle, and you would enter at the close on the next candle 9 pips above, just here. So yeah, about there you'd want to enter, and as you can see, it rose all the way up to about 40 pips, guys. Okay, so we'll put that in. Okay, so we did that one. Now this one here was a nice bearish candle. See how it's bigger than the previous candle, this one here? So it shows bearish momentum in on the charts. So you place your stop above. Like I said, if you want to be less conservative, you can place your stop up here. It means you're going to get less stop outs, but you will have bigger losses when you do have losses. The choice is yours. Sometimes I use here, sometimes I use here. Up to you. It also depends on how much you're risking too, your risk appetite, everything, right? So I'm just going to leave that there because you can place it there and you can place it here. So okay, so let's get back to this. Down to, okay, so this one closed like this. This is an entry candle, right? So that's another 40 pips. And see how at the moment I'm sort of getting chopped in and out. Like the market went down all the way over past 100 pips, but I'm getting out on this close here at 130 at 40 pips. And I know it doesn't look good at the moment, but you'll see what I'm talking about once we get a good movement in our way. Okay, so far we're up 615 pips. So following the rules have been working really well. So we got this nice down movement here. We got out on this candle. Now when we got out, it was actually an entry. So we entered 9 pips above. So this is what the beauty of this get out on the first alert candle, because the thing is that's the opposing alert candle. Okay, so we want to go from trade to trade, guys, with this, okay? And in certain circumstances, no, we wouldn't, because the candle didn't show enough conviction. And if I see anything like that, I'll tell you. Now see this candle here in the middle? This is what you call a undecided candle. So these type of candles I usually ignore. It's like this one. I just ignore them. I just usually ignore them. In between movements up or in between movements down, I tend to ignore these dojins. Sometimes you get them green, sometimes you get them red, and to me, I'll just ignore that. Okay, that can be risky, but that's the way I trade. I ignore that. I don't consider that an alert candle, so I actually ride this up to here, which is 120. It's about 129 pips. So I'm going to say 130 pips on that. Okay, so we're up 745 pips now, guys. Now, this candle here is not as big as this candle, but it's very, very close. So what I would need is I would put my stop here, right? Just above the old system, and I'd need a movement below this level on the next candle before I'd want to enter. Okay, I hope you guys understand that. You want to see structure broken. Okay, and that would be my risk on this trade. I would enter here, okay, which is below that candle, because we got close. So I want to see conviction before I enter. So I'm doing more than a 9 pip entry here. It's more like a let's have a look exactly, a 19 pip entry, 20 pip entry below. So I want to see that the market's moving my way. Okay, so right, so we enter here and the market chops up and down. As you can see, we never got to break even, so it can keep going. Now this is the sort of candle we'd get out on. It has a little bit, I mean, it's an undecided candle, so you could leave this one. However, for exits, you know, if your trade is in profit and the market has moved down quite a bit, has a little bit of body, I mean, it can be seen as a bullish signal. So if you decide, you can go, okay, well, I can ignore that, or I'll get out on this candle. It's up to you. You're going to choose to take 100 pips or around 85 pips. What I'm going to do is I'm going to get out on this candle, which is 105 pips. I'm going to say in between, because this is really up to you guys, and I'm just going to say either system is okay to get out on. Like I said, in between movements, I would ignore this signal, as you can see here or here. But because it has moved down 1, 2, 3, 4, 5 bearish candles, I'm now thinking that possibly is going to be a turnaround. Also, if you look to the left, we've got a bit of a support zone around here as well. So there is this, to me, this is a little bit of a bullish signal. I wouldn't enter on it, but I would be concerned, so I would get out. So that I'm just going to take 100 pips there. I'm not going to take 110 like it was. I'm just going to take 100. Now the beauty of this system is this trading system is you just have to check your daily charts once a day. You don't have to keep coming back to your charts and checking it. This isn't a checking chart system. You let your stop loss do the work for you if it doesn't work out. And as you can see, you'll see that there is more than 80% success with this system. Now, because the market's been going down, I'm not going to enter a sell signal. Okay, that's just part of the rules. You don't enter a sell. You have to have a little bit of a move up, even like 2 candles up, before you would enter sell. You just can't do it. It just doesn't work in this system, unless of course it's been meandering along sideways, have a little movement up. Anyway, you'll see what I mean by that as the market goes along. We've got to look for exhaustions here. You're not going to be getting it now. To me, this is a little bit of a bullish signal, but I wouldn't enter on it because it's not really. It's sort of like an in-between bullish signal. So now we've got a bearish candle. I'm not going to enter that because it's already been a down move. But then we got a bullish candle after that, which is what I was expecting, because this is a little bit of a bullish cup formation here. Now it's higher than this, and it's higher than this, and it's bigger than this previous candle. So that's a good entry. So enter here, and it went to our lock-in, yeah, at 53 pips. I mean, we lock in after as soon as the market breaks 40 pips in profit, it locks in like about. Up to you, 2, 3, 4, or 5. I usually set mine. It depends on the market. Sometimes I just set it at 2. Sometimes I set it at 3. Sometimes I set it at 4. Sometimes I set it at 5. It's up to you. It's nice to be able to get a few pips profit, even if it goes to break even. So this is okay. So we're out of that trade. Okay. Now this here is like a pin bar. Okay, it's a little bit different to these undersided candles because it's not in between. It's not in between the zone. It's quite nice. It's a nice rejection candle. However, just to be safe, because it is a little bit small, the body, I would enter on the next candle, which is right here. Okay, so I'd enter on this candle. Either candle close, or if as it was going down, I would enter on the next candle. So let's say we just entered just below this candle like so, right, which is basically the next candle entry. Open, rode that down, that went down to 132 pips. Now this is one thing I want to mention to you guys as well. When you come across a candle in between a downward movement or in between an upward movement and it's smaller than the previous candle, okay, these little candles can be ignored, okay, based on the fact that it is smaller than the previous candle. What you would do in this situation, because you wouldn't enter a buy in that situation, it's smaller. So what you can do in this situation is say, okay, right, if I get a close above this candle, above this level here, I'm out. You can do that, and that allows you to possibly get more pips. I'm just going to stick to the basic system of what I used to, of how the system works though, and I'm just going to take that's 128 pips. So I'm just going to take 130 pips here. But however, you could have seen how you could have gone all the way down here because that candle is actually smaller than this candle. Okay, so we now are waiting for a bottom or some sort of breakout sort of mentality. So now we're getting into this like dippy sort of area. Now this candle is a little bit in between as well, like I said, and so is the candle before it. It doesn't necessarily mean anything, but it can often at times. To me, if you want to put these categories in anything, it's an undecided rejection. So it can be a bullish, it can be a trend change. So that's something you want to pay attention to, but I don't like to enter on those. I'd rather wait for the next candle just to see what it's doing, if it's going to break higher, which it did. See this candle here? It broke higher than these two candles, and its body was way bigger, which means that for a whole day, the bulls had a lot more control in the market than the bears. So you can enter here after this candle on the next candle, 9 pips above, like I said, just to make sure it does keep going your direction. So about here. And you could have gotten out. Oh no, you couldn't have gotten out. Yeah, and you would have been you would have been stopped out about here, you know, at break even. It would have come up and then come back down. Would have stopped you out at break even. Now, once again, we got a bearish candle, but as you can see, it's smaller than the previous candle. So this is a conundrum. You can't enter a trade like that. You can enter if you get a bearish candle after it, like down here, or if you get more momentum of a bullish candle, you can enter after that. Okay? So what you do, okay, is you put your stop here, because this does look a little bit like a pin bar, and you tell, you know, and if you, when you enter on this candle, see this candle here that broke above, you put your stop just below the previous candle, or you can put it just below as well. No, that's up to you. This would have been a situation where if you put the stop below, you would have probably been just stopped out on this candle, or you would have been taken to break even. No, you would have been just stopped out. Okay, so right, so you enter a trade just here. And that was another great entry there. Even if you got stopped out there, that would have been a great entry to enter straight afterwards as well. That's a nice bullish sentiment. And you can see how, like, as it's going up, the pins go this way, and when it's going down, the pins are going the other way. That's how you can tell the difference between an uptrend and a downtrend on the daily. It's a little trick. So as the market keeps going up here, we take it to the next alert candle, which is right here, which is 123 pips. So I'll just say 120. Okay, so and this one is bigger than the previous candle, so this is not a bad entry. It's not the perfectest candle, but there's no such thing as a perfect candle. You put your stop above here, you enter here, and you run that down. So that was another break-even stop out. Boom, come back up, stabbed you out. And see, that's how the break-even is protecting you in this market. Okay, so now I want to put your eyes on this candle. Now, I know it hasn't fallen much, so this one would be an optional one to enter. In fact, I'm not even going to enter it, even though I did put the signal behind it. What I like to do is have at least 2 candles going down before entering a bull signal, so I'll leave that one be. Now, we got all this move up here, and we got this nice bearish candle right here, which is a perfect. We've had 1, 2, 3, 4, 5, so definitely going to probably get some exhaustion here. We get a nice bearish candle here, but however, it's not as big as the previous candle. And so what's the rule there? We have to enter below the previous candle close, so we can enter about here. You see this bottom of this close as like a support, like a minor support area. And so when it gets below that, the market will tend to just keep going in that direction. So there's your risk, and there's your entry. So you enter in here, and you can roll that down to here, which is 102 pips. Yeah, so we'll put that it is 100. Okay. Now, we've gotten down here, this area, we got this bullish candle. Now, we have not broken above this, and to me, I would be waiting. I would wait for a break above here, above this zone. See this zone here? Right? So, like about here, I would like to enter this one. I'd place my stop below that area, and I would enter here. So, I know, or you can place it down here. Actually, that'd be more like it, just a couple of pips below there. So now, as soon as it breaks above there, you know that it's most likely going up. Just from the way the candles look on the daily, you got the highest probability. You can just enter afterwards, like I said, because this is a pretty big bullish candle. You've had price move down 3 candles at least, 2 or 3 candles. So that's a good, what I mean by the down move. Then you want the up move. Now, that shows that there's bullish conviction in the market. This is a little bit of a more conservative approach, entering there. Now, you see this candle? They're the candles I'm talking about you can ignore. See how it's right in the middle? They're like undecided doji, so you can ignore them. This candle you would not ignore. The reason being is even though it's got little body, it went all the way up here and it came back down. So that's what I call an awesome pin bar. It's showing selling pressure, and that would be a great entry as well after that. 9 pips below, of course. So let me just wrap this one. That's 250 pips. Now you place your stop here. Right, oh, it doesn't have to be that far away from the... And this is sort of telling you where the resistance zone is, right? So you want the market to move higher if you're going to be wrong. So you'd enter about here, and as you can see, the market did keep trying to come back in. It's very, being very aggressive, and it's trying to come back in. Definitely would have been stopped out at break even somewhere around here, in here, and then you would have been waiting for another sell entry. This is a pin bar here, but because it's a bullish pin bar, it wouldn't be 100%. This is a bearish pin bar, but showing bullish action. So it's something that you would be like, you'd be thinking about. You could have entered, most likely, if you entered here, oh no, that's when you got stopped out at break even, so you wouldn't have entered there. This one here, you could have entered, even though it's not a great candle, and you put your stop above the candle. I'm pretty sure that would have possibly come up and hit your candle, but if it did come up and hit you, that candle there, oh no, you would have, it actually wouldn't have mattered actually. Yeah, see, it went to 46 pips and then it came back up, so it doesn't matter. The thing is, just follow the system. You're gonna get losses, just accept the losses. They're okay. They just happen every now and then, guys. So I can't really move this. Okay, so that would have been that one there, right? Now you got this great bearish candle here. Its body engulfed this one, this one, this one, this one. So that's a great engulfing candle. That's basically saying like, and that's what they actually call often like something like a belt or something like that. And it's basically where the market actually jumps up and then drops down. So this was a great entry to enter around here. You put your stop up here. Yeah, enter about here on this candle, and you rode it down to here. Okay, so that was 110 pips, that one. And now you got a nice pin bar here on this one here. So that was a nice little pin bar. That's a great little entry if you ask me. And yeah, you just open that, you go up to about here, 40, that would have been 44 pips, 48 pips, and then it actually came down and actually tapped you out at break even. And then, this is not a good entry candle. Yeah, you probably could have. Yeah, actually, now to think about it, oh, wait a second, where was I tapped out? Oh, yeah, tapped out there. And so you possibly could have gone short here. Put your stop here. And yeah, it just went to break even again, and bam. And now, with this, this is actually interesting. This is actually a massive candle. These ones are actually quite unfortunate when this happens, because you're like, wow, I wish I'd gotten in on that whole move. So, if you're a breakout trader, you'd be entering above here, this area where this line is. However, if you're not breakout trading and you're just following the alert candle system, you would have taken from entering here, would have been an entry about here, and you would have gotten out here, which is about 30 pips. Now, here's a nice bearish candle, bigger than the previous candle. You put your stop loss here. Right, it is a little bit closer, guys, but for some reason I'm having trouble putting these lines. They sort of look a bit crazy, you know. So I'm doing my best, guys. So yeah, there we go. Okay, so you could have entered after that, and this could actually be a loss, this one. No, that's another break even. The break evens tend to protect your account when the market doesn't go your way, but at the same time you would have probably gotten more moves in your favor if you didn't use a break even. So yeah, okay, so now we got this big bullish candle here. It's bigger than this previous candle, and it's so, you know, place a stop probably conservatively below all these pins here, these previous two pins. You enter above, which it did open, and you just wait it out, because yes, you can see it just kept going and going and going, and you know, you didn't get to break even, by the way, guys. Let's just have a look. Yeah, no, definitely didn't get to break even. So you ride it out, and you could have, you know, this is like I was telling you, this candle here is smaller than the previous candle. So if you want, you can actually ignore that candle and you can keep going. If you don't ignore it, you'll get 70 pips. If you do ignore it, you'll get, well, see, in my normal trading, I would get out on this pin bar, just because this pin bar is a great rejection candle in general. In Forex, it just means rejection. That's exactly what it means. But let's say we just get out following the system, waiting for the alert candle, which is 130 pips. Okay, so now that's a great entry, by the way, guys. Now with this one, you would want to put your stop here, and you would want to enter. Say you entered on this candle, this bearish pin bar, then you would enter about here. Or if you wanted to enter after this bearish engulfing, then you would enter 9 pips below here. So you wouldn't enter until here, right? And that went 51 pips there, which basically stopped you at a break even, that trade. And so then, you know, we've got pretty much a perfect entry again here. These candles are almost the same size. Okay, this is being a bit frustrating again. Okay, so let me just put it up there. So this is basically the same size. That's what they often refer to in Forex as a railroad. And you know, you just enter. What I do is I just be a little bit conservative. Enter just below these closes here. So you'd be entering about here. Put an order, right? And then you ride that down to the next alert candle, which was right to here. 97 pips. So I'll put 90 for this one. Now that's a good entry because it's bigger than the previous candle there. So you put your stop below, enter on this candle, and you ride it up to the next alert candle, which is here. Okay, hold on. Which is 41, yeah, 40 pips. Okay, so this one here, right, so put this here, enter a short about here, right, and you ride that down to about here, which is 60 pips. What a great sell-off this was. This ended up being as well. So, okay, now this candle here is bigger than these previous two candles with the undecided candles. So it looked like the bulls were starting to get a bit of control. We've got a bit of a support area here as well. So I would be entering long here in this situation, right here. I'll be putting my stop here. And let's see if it at least got to break even. Okay, entered about here. Went up to 43, 40 pips. I'm going to say this is just too close to 40. I'm going to say this actually is a loss, which was a loss of about 77 pips. I'm going to say a loss of 80 pips. Not everything can be winners, guys. Okay, so this but as you can see, this is high probability either way. This candle here is another bearish engulfing, which totally took out the lows there. You enter below, stop loss there. You know that if it goes back up there, it's most likely going back up. That's a doji candle, so you can ignore that. You can ride that down to here, which is 144 pips. So put that as 140. Now this one is bigger than the previous candle here. It shows a lot of bullish conviction there. So that could be a possible turnaround. So you enter along, you put your stop loss here below the candle. In fact, you could put it here. Up to you. And then you enter long 9 pips above. Yep, we didn't get to break even. So that ended up being a loss down here for about 100 pips. Okay, so now these ones are quite small, so I wouldn't use that as bullish conviction. This bearish candle, yeah, it's okay, but it's not the right sort of formation for me. If you did enter it, that one would have been lost. Let's just take that one as a loss as well. Oh no, wait a second, it didn't break lower than that candle. That's actually basically usually when the banks are starting to buy. They'll actually buy at the beginning of the candle. Usually the candle start. They'll actually literally buy right at the beginning of the candle start. So if I put my stop here, below this candle, like say about here, as soon as that candle starts, they just whack in their millions or whatever, and they buy it up. And that's very, very common. You'll see that, you know, on the daily candles especially, when that starts to happen to turn around. So it looks like to me that, you know, we could get a massive turnaround in the Forex market, possibly over the next few days. So that's a good buy entry there as well. After that, I'd be very, very happy to buy there. A buy here. Yeah, it didn't get to break even, and possibly that would have been, yeah, I'll say that's a loss as well. About 160 pip loss. So overall, going over a whole, it's about 7 or 8 months worth of data there with the daily candle alert system. Made a total of about 1,700 pips. We went just under 2,000 pips near the end there, and we sort of cut back a little bit as we took a few little loss trades. That's okay, that's part of the trading system. As you can see, very, very profitable, very, very high reward to risk ratio with this system. And yeah, it can just be traded over and over again, and you can use it on any time frame. I want to show you one more chart just before I go, because this is the Euro US, and it doesn't tend to move very often. So I'm going to show you another chart just quickly, and this is what I call, this is one of my favorite currency pairs. It's called the GBP New Zealand, and you'll just see what I mean here in a moment. The price action really works really well on this, and I'll just show you as an example. I'll just go through a few trades, okay? Okay, so you see how we got this bullish candle here that went above these two candles, went higher than these two candles? That meant that that was a good entry, right? So you entered above, 9 pips above, make sure, and you ride it up to the next alert candle, which is 412 pips. Okay? Now here, you're getting all these pins. Okay, now we got exactly where we exited was actually quite a nice bearish candle. This one here, not too bad. But we'd want to open below, right? We want to put our stop up about here, just above that previous pin, and we'd want to open below. Now we had some sort of weird weekend action that sort of happened. You can tell this is a weekend action thing, but then the market really sold off really, really well. And if you ran that down to the next alert candle, I'll just clear this. So I'll go once. The first trade we just did was 400. Now it broke. Okay, so it broke below about here properly. I mean, we could have gotten in on this green candle here, I'd say. And so we're in a bit of negative territory for now. Okay, but then the market actually did sell off. So this was actually a risk of about 200 pips on this trade. So yeah, you're going to be risking more on the GBP New Zealand, but you're going to be getting much more wins when it goes your way. So here we go. I'll ride this down to the next alert candle. That's at 480 pips. Okay, now here's a beautiful one, and I'll explain why. If you look to the left, you'll see that this was a really good support zone right here, and you see that it's right in line. In fact, if I draw the line up to this zone, you can see why we had support action here, basically. Okay, now we don't know if this is going to continue into a downtrend, so you've got to always expect that these areas could be respected. So this is a great entry, this candle, and we put our stop below and we enter long here, which it went up 160 pips. Yeah, and I mean, even if you just, this is what I was trying to say to you, if all you small traders, you know, who just want to take 100 to 150 pips, there's no better way than the alert candle system, I tell you that. Now, if you just followed my rules and just took and just put a break even, like 4 or 5 pips or whatever, you would have been break evened out on the next trade. Now, okay, now let's move across here. You see how this bearish candle came and actually closed on the line? That tells me that it's still being supported. We need to close below. See how this one is on the line as well, but it's not really fully valid because why? It's smaller than the previous candle. Then the next candle, it closed below the line. This is a support line, guys, right? Closed below it, but do we have a new candle to enter on? No, we don't. This candle here pulled back up, so we're still respecting this support line. Then finally, we got a candle below the support, and it broke, and it closed down here, right? So we had a new candle down here. So this told us that we had a good entry down here. So you place your stop here, or what I often do as well, just place the stop just above the support zone, so you know that it's now probably resistance. So if it comes back up, it's just going to ping it and then come back down. Up to you. You decide. Now, if you rode that one down, that would have been 80 pips, that one there. Okay. And see that candle's bigger than this previous candle here. And so that went all the way up to 150 pips there, and then come back down and break even, right? And see, it's not really much of an up move, so I wouldn't be interested in selling just yet. But if you did, even though it's just 2 candles, if you did, yeah, you would have been knocked out at break even again. Then you got this nice conviction bullish candle, right? And it is a bit pingy, it is a bit rejection-y, but let's say we did take that one, right? And I mean, that went to past 40, but let's say it didn't, you would take a loss of about 170 pips. So let's take a loss. Okay, now we've got an undecided candle, yeah? Right, which can be a bearish signal, but we don't know. And then we got a massive sell-off. In fact, when it got past here, we sort of knew that this would be a massive sell-off. And we can't enter that because we're not entering after You can decide to enter after that trade. It's up to you. I mean, you can. You would have been tapped out at break even. I mean, you would have entered here. That's an unbelievable amount of risk to see if the market keeps going. That went 66 pips in your favor, and then the bullish candle moved up, which would have been a great entry, by the way. I know that the previous candle is bigger. So you might want to stayed out of that one. Yeah, and you might want to stay out of the next one as well. And then the next one, you might want to, you know, like you might have thought to yourself, well, you know, like, this is up to you. If you did stay in the market here, this candle, because see how it's separated from this big candle here? If you did stay in it, you would have gotten all the way up to here, which is 42 pips. Now, I mean, at the maximum, you could have gotten 270 pips. So let's move along now. Let's move along to this one, which we know is a good price action signal. It's got all the characteristics we like. It's bigger than the previous candle. The market's moved up. It's bigger than the previous candle, and it's closed below that previous candle, and it's quite bearish. So we like to enter on those ones. We enter here, and we write it down. You know, like sometimes in certain circumstances, because you saw that it's supported there, you might want to just get out there. But if you're following our alert candle system, you actually would have gotten more. You would have actually gone all the way down to here, which is, it closed at 380 pips there. Okay? And see how the candle's a little bit smaller than the bearish candle? That's one where, you know, you could enter on it if you want, but according to my system of how I trade, I like a bigger bullish close or a bigger bearish close, so I wouldn't enter on that one. So anyway, let's put our 380 here. This is only about 4 trades, by the way. We're up 1100 pips. You see how this isn't closing below this area? I've actually even got this marked on the chart now because I'm sort of watching the price action at the moment. I'm waiting for a break above or below this, well, not below this area. I'm waiting for a break above. My bias is very bullish on this currency pair at the moment because it's extremely undervalued. So I'm waiting for a break above this area before I'd be interested in actually getting into trading it again. And as you can see, the market's just been moving sideways in this, so it's sort of ranging really at the moment here. And I mean, let's have a look at one more. Let's have a look at a couple more signals here, just while we've got time. Here's another bearish signal. It's got all the characteristics. It's bigger than the previous candle. It's bigger than the previous candle here too. It's all, you know, and it's engulfing the previous candle. It's telling the signal of, you know, you can put your stop here or here. It's telling the signal that, you know, sell me is what it's trying to tell you on the daily chart. So if you jumped in here, you could have had an easy 100 pips there, just bam, straight down to that alert candle there. Now that candle's not bigger than the previous candle, so it's most likely not a good entry. But however, if you got another bullish candle afterwards, you definitely would be interested. And if you did get in, if you did decide to take that one, you would have had 100 pip loss. So you would have had 100 pip gain, 100 pip loss. To me, not value enough. It's not the perfect pin bar to me. These are better looking pin bars to me. See how the market really moved down and the pin bars were at the low? This should be down here to be a good pin bar. So anyway, we've got this big bearish signal here, and it came up, and then it came down. That's one you could enter underneath as well. That's up to you. And see this one here as well. It's like it had all the characteristics. Now this is a perfect pin bar here. See this perfect pin bar? Beautiful. This candle here, that's what I call close enough. To me, that's close enough. Close enough to the same size as the previous candle, where you can actually say, okay, that is a bearish signal. Here's another perfect signal right here, guys. See this? Awesome. So that one would have gone all the way down to this alert candle, because this is a bit of an ignore candle. 500 pips. Bam. And then see this next candle here. Beautiful. Bigger than this candle, bigger than this candle, and away it goes. The bulls have control now. Boom, 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 boom. All the way up to here. 280 pips. 280 pips plus 500 pips just before it. 2 trades here, right here. Beautiful trades, guys. Yeah? And they're everywhere. Okay, so that's a little bit about the alert candle system. If you have any questions, feel free to ask me. This is a daily trading system that you can use basically on all charts, all time frames, and basically you're just looking the whole characteristic of it. You're just looking for, like, here's an example. Look at this. It's just not bigger than this, but it's so close. And then on the next candle, it breaks below this previous candle. So then that could be a good entry. So you put your stop above. It's about understanding how to read the candles, guys. So you put your stop above, and also how much you really want to risk. Because, let's look at this, right? You've got, with no technical understanding in Forex, you have about a 50% chance of success, right? 50-50. The market could go up, it could go down. If you just placed a buy order or a sell order, the market either has a 50% chance roughly of going up or down if you have no technical knowledge. It's just like flipping a coin. But if you have technical knowledge, you understand what the candles are saying, then you can increase that. That's what this does. This is increasing your probability by understanding this is the daily movement. The bears have had control, or the bulls have had control, so you know that it's most likely going to keep going your way, and it's broken below the lows of the previous day, or it's bigger than the previous lows of the candle. That's what these bigger bearish engulfing candles, like I said, here, enter here, and then look. It's sold off all the way down to here. 320 pips, 329 pips. This one's a perfect one example. It closed below these candles here. So it went up. You put, whoop. Well, that would work too, but hold on. And this looked like a bit of a resistance zone for a few days here, right? It came up here. Then the market sold off. So this is a really good entry. Good place to stop, just there. You enter about here, and I actually did trade these ones. I'm just remembering I was trading them on the 4-hour chart, but I did trade these. See, and I mean but on the 4-hour I managed to get out at all these bottoms as well. So this actually went down 223 pips, and then it came back up. I mean, if you just were waiting for the alert system, you would have gotten snapped out at about at break even. Yeah, going to 220 pips and then getting taken out at break even. That can be harmful. That can suck. But, if you're just wanting to follow the system, you follow the daily candles. Very easy system to follow, and it works. It just works time and time again, guys. Here's another one here. We have the perfect, bigger than the previous candle. You enter after, and it pretty much did the same thing. You went straight down here. That's 70 pips. Just quick, easy, 70 pips. No questions asked. Not too difficult, guys. Here's another one. And this is if you're closing at the alert candle. 48 pips, basically 50 pips, guys. If you just wrote it down, said I just want 100 pips, it went all the way to 130 pips down here. Right? In fact, if you just want to have a target with this system of just say, look, guys, I'm just targeting 150 pips every time. I don't care about the alert candle close. You can pretty much get that on nearly every single trade. Take this one as an example. Right? Went down from here to 180 pips. Bam. Then came up in the alert candle. Closed out at about 100. Right? Let's have a look at another one. This one here. Went all the way down to 330 pips. But if you'd gotten out at 150 pips, you would have gotten out here. Seems like, you got out the lows, quite a safe way of trading. With this one, if you're getting out at 150 pips, like this is like a lot of traders do, they just create a set profit amount. They're risking 120 pips here to get 150 pips. But guess what? If you roll it to the alert count, that's 400 pips. I prefer to take smaller profits sometimes and then take massive profit when the market actually goes my way. I just prefer that, guys. Sometimes I can, I've had trades. My record trade was over 1,000 pips. I mean, and I've had quite commonly trades of 300, 400 pips. You got to ask yourself, is that better than 150 pips, or is that better than 200 pips? The choice is yours. Go through, do your back testing, have a look and see how this strategy works. See if it works. It's working for you guys as well. Here's a perfect example. See how you get all these green candles in here? So you're getting chopped up, but see how the green candles are smaller than the previous candle? They're almost in a way telling you to stay in. Just wait. But at the same time, you can get out on any of these candles. It's completely fine and completely understandable. I do all the time. I like to, if I'm using the alert candle system, I like to just stick to the alert candle system, because as soon as the bulls start getting back in, they can get back in really quick, and then you're out. And I just find it's a really consistent way. I don't really have to pay attention to the charts too much. I enter the trades. If the trade looks good, I enter the trade. If it doesn't look good, I don't enter the trade. And the bigger, like I said, the bigger than the previous candle entry it just seems to work really, really well. And if it's not a bigger candle, like I said, a close here, I just put an order in below here, just below the low there. So I know that if the price goes down there, it's most likely just going to keep going. And that's the basics of my system there, with the daily alert candle. So thanks for watching, guys, and I'll speak to you again soon. If you have any questions, feel free to ask or comment below. Thanks for watching, and have a great rest of the day. And by the way, before you go, feel free to like me on Facebook, share this video around, or come and visit my site, forexreviews.info. Add your name and email to my email list, and subscribe, guys, and I'll speak to you again soon. Okay, bye for now.